Hey folks, I'm Mike Evers, OrthoWorld Senior Market Analyst. We're back from the holiday break and we're coming up on the fourth quarter earnings season. So in this short video today, I want to give you 3 things that we're watching as companies begin to report their results. Let's jump in. All right, the first thing I'm watching is what is driving the elevated growth rate of the orthopedic industry. We're estimating mid-single digit growth for the industry in 2024. And that's meaningfully above its historical average. But the question is that merely the tail end of a recovery or normalization after such a long period of disruption? Or have we moved into this new phase of upside driven by improved technology and patient demographics? Now, we're not going to get that answer in one quarter alone, but I think if orthopedic growth rates stay where they've been over the last couple of quarters, we can make a pretty strong case that this is going to be a durable tailwind. The second thing I'm watching is a group of companies that ran into some obstacles and have a lot to prove in the fourth quarter and 2025. And I broke it into 3 buckets. First is operational. Zimmer Biomet, Smith & Nephew, and CONMED all ran into challenges over the last couple quarters. And I'm watching to see how they were able to attack those challenges and if they're going to be able to generate momentum going into 2025. The second group is facing competitive pressure. Treace Medical and Anika both made substantial pivots in 2024 as they dealt with increased competition and changing market dynamics. So are those companies going to be able to execute on their plan to get back on track? And then the third group is financial. ATEC and Paragon 28 have been some of the best growth stories in orthopedics over the last several years. But now they're switching gears and they're aiming for sustainability and profitability. So those 2 companies are going to face a whole new set of challenges in the coming quarters. Then the third and final thing that I'm watching is the uptake of new technology in orthopedic care. There's more digital tech in ortho now than there ever has been, and the market's becoming more saturated by the moment. Now, is this increased availability of technology going to translate into increased adoption among surgeons? You'll recall that adoption of tech in ortho is fairly low compared to other areas in medtech and other industries. However, if these technologies do go mainstream, if they do become the standard of care, what is that going to mean for mid-sized and small companies in ortho? We've said a couple times that these technologies aren't really plug and play for your traditional orthopedic company. They require tremendous amounts of money to buy, to develop, to maintain, and they require specialized expertise that can be in really short supply within orthopedics and the marketplace overall. So what does that mean for those companies? I don't know that we're going to learn that for several years, but I don't think it's too early to start contemplating what a future like that might mean for our industry. All right, those are my 3 things. What's driving the upside in orthopedics right now? How are these challenged companies going to rise to the occasion for 2025? And what does the explosion of technology in orthopedics mean for the market dynamics? Thanks for watching, everybody. I'm Mike Evers. Don't forget to like and subscribe on YouTube to catch all of our future videos. And if you want to read my coverage of 4Q results, head over to orthoworld.com. I'll see you there.